It's the middle of April. Can you believe it? Where is this year going? As we close out Q1, I wanted to take a moment and provide you with a quick market update. Hi there. My name is Sarah Rubin, and I'm the Licensed Marketing Director for Fairway Independent Mortgage Corporation's Mid-Atlantic region. Before we dive into our Q1 look back and update on the housing market, I would absolutely love if you would hit that like and subscribe button right down below so that you never miss a video from us again. We're back every other Friday to provide you with information on the mortgage process, home buying landscape in general, and our local communities, as well as so much more. If you like what you see, go ahead and hit that bell button right down below as well, so you are notified by YouTube each and every time a new video is posted from our account. As always, we're here and available to answer any questions you may have on how this information or any information in our video impacts you directly. Okay, let's dive into today's video. Q1 proved to bring about a lot of changes in the home buying market. As we started to move out of the pandemic, and based on the Fed's decision to taper their Bond and Treasury purchases, as well as projections on inflation, we began to see mortgage interest rates rise. Throughout today's video, we will talk about home prices, the cost of waiting, and your buying power as a consumer in today's market. Let's start with the S&P CoreLogic Case-Shiller Index. First, what is that? And probably more importantly, why should you care? The S&P CoreLogic Case-Shiller Indices are the leading measure of home prices throughout the country. The report released just a few weeks ago measures the rate of increase or decrease in home prices across the country. The latest results show that in January 2022, home prices continued to increase nationwide. The report found that there was a 19.2% annual gain in January, up from 18.9% the previous month. This report continues to show us that for those of you who already own homes, equity is building at record speeds. For those who are yet to buy a home or are in the process of looking, there is a cost of waiting, which we will dive into now. The cost of waiting. As previously noted, based on the Fed decision to taper their Bond and Treasury purchases and the projection on inflation, we should expect to continue to see mortgage interest rates rise. While I know the idea of a rising interest rate environment makes everyone a little bit nervous, rates are still expected to remain incredibly low from a historic perspective. But rising interest rates combined with increasing home values can make a significant difference for those choosing to wait out the market. But what does the difference actually look like when we're talking about dollars and cents? The principal and interest for a 30-year fixed rate mortgage on a home priced at $360,000, assuming a 20% down payment for example purposes, and using a sample rate of 3.5%, the principal and interest is just about $1,348 per month. Now let's assume a 5% appreciation value year over year, and that rates rise to 5%. The new home price is $378,000, still using that 20% down payment and a 30-year fixed rate mortgage. The new principal and interest payment is just about $1,624. The cost of waiting 1 year in this example is $276 per month in principal and interest. While this number may or may not seem huge, for somebody who is already maxing out their buying power, it really could be the difference between qualifying and not. Okay, so now that we've talked about home appreciation and rising interest rates, let's talk about your buying power. If you are currently in the market looking to buy, it's incredibly important to remember that in today's rate environment, a pre-approval or a conversation that you had with your loan officer 2 weeks ago is not still sufficient, especially if you're looking at the top of your budget. As discussed in our 2022 market forecast and mentioned above, rates are predicted to steadily increase throughout the year, and that naturally impacts your buying power. In short, what somebody can qualify for at the very top of their budget with a 4% interest rate is simply not the same as what they can qualify for at a 5% interest rate. This is not meant to scare you, but with inventory continuing to be incredibly limited, many properties seeing multiple offers, and as we've mentioned, interest rates continuing to rise, it is imperative that you make sure that at the time of offer, you can qualify for what you are presenting in your offer. Our loan officers are always happy to work with you to ensure that you feel comfortable and confident with the situation at hand. As a reminder, a complete pre-approval should provide you with a detailed estimate of your monthly payments and closing costs, and include taking the time to review the numbers with you to ensure that you truly understand your options. You should also be providing documentation to your loan officer from the very start so that all the numbers have been verified and your pre-approval is truly that, not just a pre-qualification based on a rough estimate. A pre-qualification is not the same and not nearly as impactful as a pre-approval. Please know that this is just a brief overview of things happening in today's market. Feel free to drop your questions and comments right below or visit our website, www.fairwaymidatlantic.com, and contact one of our loan officers today. Thank you so much for tuning in for our Q1 recap and home buying landscape overlook, and I look forward to talking to you again soon.